Hey folks, welcome to Market Technical Analysis for Monday, September 24th, 2007. Well, we had a light day in volume today, and overall there was not a lot of action when you look at the closing numbers. And the Dow was down 61, the Nasdaq down about 3, and the S&P down about 8. Now overall you wouldn't think, well, alright, the Nasdaq was down 3, nothing really going on today. However, looking at the intraday chart, and we have the ES chart up here, what you're going to see here is actually quite some nice fluctuations intraday. And what we saw here, guys, early on the market was selling off. And then before the bell, basically going into the open here, we had a big buy program. And this buy program spiked us up. And look at the size of this green candle. This is a big time candle, guys. The size of this candle, to be exact, went from 1535.50 all the way upwards of 1542. So you're talking about almost 7-point spike up in the ES December contract. That's a big time spike. And this buy program basically squeezed us up, basically topping out at 1542. At that point, what we saw was a little bit of selling pressure come in on light volume, so it wasn't very convincing. And again, they had to retest that high, and they took this market up here to make a new high, which was the high of the day over 1542. However, the close on this candle was lower than this high, which signaled us a possible sell-off. And that's exactly what we got. And I want to go over that again here, folks, for you guys that are into technical analysis. When you look for a double top, or either a breakout or a double top, what you're going to look for is a close comparable to the previous high here on the candlestick. And this high closed at the high of this candle. This next candle didn't really change anything because it dipped higher for a one tick and then sold off. However, when we retested the high here, what we saw was a move higher than that. But again, the candle closed lower than that. And this is where the candle closed, which is well below the close here. And again, that signals us a sell-off. However, most of this volume was very light here. And this is key to remember, guys. It's all about volume when it comes down to it. And what we saw here, guys, light volume and a little bit of a sell-off. Very slow sell-off. And we got down to the 20 moving average right here. We dipped down here, and we went through the 20, the 50, and the 200. But we didn't close below the 50 or the 200. And again, that was a signal to show that we hadn't really definitely broken down yet. And in the next candle, again, we closed below the 50, and we only had the 200 to take out, which was taken out in the next candle. And this is where things got interesting today, folks, because we started to see increasing volume, and you can see it down here. All right, we increasing volume. We closed below the 200. That signaled us a change in direction here overall, and you continue to see a sell-off. 4 straight red candles all the way down here, coinciding with a big volume candle here, which usually signifies a near-term bounce. Alright, and again, keep that in mind. When you get that little bit of panic, and that's what started to come in here, it always coincides with a little bit of volume here, and that's what you get there. You usually get a bottoming, you get a small bounce up here, but then again, we came right back and started to sell again. And again, the market kind of traded sideways into the close here, and that's where we closed with the S&P down again, 8 points on the day, Nasdaq down 3, Dow down 61. Now, what's so interesting about today? Well, we had a big-time reversal. The Nasdaq at the highs, and we'll switch over to the Nasdaq chart here. The Nasdaq right here on this buy pressure was up almost 20 and change points. All right, so for the Nasdaq to reverse all the way down here, this is a substantial reversal. And I just want you guys to take note here how basically the end of the day coincided with a covering here. We traded right along the 200 average for most of the late afternoon period here for about an hour plus. And that's interesting to note there. Again, you guys know how strong those moving averages are. Now, what I want to really talk about here, and we're just going to show the SPY intraday chart. And again, you can see the SPY rose really quickly on that buy program, only to roll over the rest of the day. All right, now when we go to the daily chart, we're making a sort of a slightly downward trending pattern here on the SPY. But I really want to focus in on the ES. I'm a big believer that you can read the ES a lot better. And here what we see is a sideways pattern. Now what we were looking for today here in the close of this candle, and this dot represents the close of today even though you don't see the rest of the candle, we were looking to see if today's candle on the ES would close below the last 2 days' low. A close below that low would signal a drop in this market in the next couple days. However, we did get down to the point where we actually dipped one tick below the low, but we did not close lower. So without that close lower, you can't say for sure whether or not this market will continue to sell tomorrow or not. Therefore, you cannot jump on short, and we did not jump on short in this market on any index plays at all. All right, you really want to see a significant breakdown, meaning a close below the lows here before you feel confident that continued movement down. Basically, trading into this bar here will occur. Okay? Now, on the other side, what we want to notice here is that we're making a little bit of an angle, and I'm going to go to my trend tools to really show you guys what we're talking about here. In the near term, you're making this type of pattern here, guys, all right? And you can actually even talk about it more like this, but if you want to trend a little better, you can look at this low right here, all right? And what you're going to see here is, again, we're talking about a close below this low here on the ES chart, and you can actually start to see a move down, possibly down towards this 20 moving average. And you guys know how we feel about that 20. It's like a magnet, and eventually the stock, as it rises, the 20 moving average, if the stock's above, it's going to continue to rise like that, but eventually this index or this stock or whatever it may be you're looking at has to come down and touch this moving average, or at least get down to it. All right, then the 20 can be used as support and will keep things on the upside. A lot of times the first hit of the 20, you get a tremendous bounce off that moving average. Okay, in addition, what we just want to notify here also is you can take this right here, all right, and if you want to look at it like this, you can look at it as a big triangle formation here, all right? And again, eventually these two lines will come out here if we stay in this range, and they'll meet somewhere out further out on the side here in the coming weeks. And at some point, you're going to have to break out to the upside or break down to the downside. And that's going to be very interesting to note. However, what I also want to point out is the 1505 level on the cash S&P is really the key level. And it's really 1504, but you can watch for a close below 1504 to really signal that. If we happen to get down there and close, and by the way, we're not that far from it now. We're a little over 10 points. We're about 12, 13 points on the downside. If we fall 12 or 13 points from taking that number out. If we take that number out, it could really signal us a major fall coming here, all right, folks? And I'm just going to draw on this line. This is my trend line that I've kind of put in play here. And what I want to show you guys is there's no close on any candle below this. However, the dips in the candles really coincide here. And you can see here, the bottom here, right here, and then we dipped below it the next day, but we never closed below it. We dipped below it the next day here, we never closed below this line. This line touches it here. This line dipped below, but we never closed below it. This seems to be some trend here that we're looking at. And that 1505 level is going to somewhat coincide on the downside here with this line. And also note how this line now is the 20 and the 50 moving average coming together right here. Okay? So all in all, what we're seeing here, guys, is a possible breakdown. Should we get below this 20 and 50 moving average, it could take out this line. We've already had 1, 2, 3, possible 4 hits. Eventually, just like a door, when you run up against the door enough times, eventually you break through. So what I'd like to just summarize everything in saying, we're in an intermediate period here. Right here we have the highs in this market. We break out above this high in this market and you got to go to the long side bias. However, here's the downside bias should we break below this line. So as long as we trade in this area above that 1505, 1504 area on the cash S&P, all right, you have to have a neutral bias. And you don't want to get stuck because, yeah, we could jump short here or we could jump long. And, yeah, maybe we're right. But do you really want to just gamble like that? I mean, if you feel like that, then in our opinion, well, if we feel like that, we might as well just go to the casino and throw some money on black or red. And the idea being here is that as a good trader looking at technicals, you put the odds in your favor by quite a bit. You know, 80 to 90% the odds should be in your favor for a solid trade. And that's what we try to do. All right, folks? So taking a look at here, here's our key arena. We're trading between these two lines, and unless we break below and close below or above, you could have a little intermediate trend trading, okay? As we look at the NASDAQ chart here quickly, I'm just going to show you the same thing's happening here. We have the trend up here, okay? This is the break of the high, and you could also draw a triangle here from the top here to where we are here, and then from the bottom here as well. And you're having multiple hits here on the downside. Now, what we also want to do is we want to flip to a larger time frame on the daily. Let's look at the weekly chart. Now, what you could look at this is also a possible breakdown line on the weekly. And again, we keep on telling everyone that we're not 100% sold here on this rally. Everything seems to be fine. The talking heads on TV are pumping this market back up. It seems like everything got fixed just by this one interest rate cut. And listen, you know, as long as we're in this intermediate trade, anything can happen. All right, until we break down or break up, we won't know for sure. But I have to get this honest feeling that there is another shoe to drop. All right, things are not all perfect now, and I just wish, you know, we're staying very cautious on the long side. We might have some longs here and there for scalp plays, but we're playing it very short term. just looking for short-term breakouts on different charts on different stocks. And again, any of those that we do have will go in the swing trade alerts to our subscribers. All right. On the downside, we're being very cautious here. We did talk in the Sunday night chat, by the way, which is a free chat room, and everyone can join and go to the website and look under Sunday night chat. We did talk about the USO being a possible short here, and we did see that closing down about 32 cents here, and this is the intraday chart on that. And the USO was getting a little weak. We did talk about DUG as well, which was up nicely. That's 2 times short the oil and gas, which was up 41 cents today. So we are looking there. We also think gold needs to come in, and again, this is all coinciding with our belief that the dollar needs to stabilize down here. All right, there might be a small amount of downside in the dollar left, but at some point we should see a little bottom forming in the dollar and a movement, possible move sideways to up.